Okay, so it's definitely time for an update on USD CHF. Now, if you remember in our first analysis on this pair, what did we say? We said from here, so from this previous support, which is now turned resistance here, after the market has created a perfect impulse and correction to this previous support and resistance, we want to see the market make a move to the downside and break the structure again to the downside. And that is exactly what the market has done. From here, the market first created this structure, which was the one that we wanted to see the market break. And in fact, that is what the market did, breaking the structure back to the downside. Now, in breaking the structure to the downside, the market created the M formation. And after an M formation, what do you want to see? You want to see the market make a pullback to the neckline of the formation, aka the new support now turned resistance. And that is exactly what the market is testing at the moment. Now, if you want informations on a retracement in the market, where are you supposed to be taking your Fibonacci? From the high to the low of the impulse. And what you can see that the 0.618, aka the golden ratio, is exactly what the market had rejected. Then it rejected the 50%, and now we have a 0.382 Fibonacci retracement, which currently the market seems to be rejecting to the downside for the continuation. Now, everything from a daily perspective is therefore pushing to the downside. Now, from a weekly perspective, we have this candle here, and what do you expect? You expect the next candles to fill in the wick of this candle. We spoke about this pattern many times. Now, let's go and see what we have from a USD CHF perspective. And let's see what kind of situation we have. So how are hedge funds at the moment positioned on CHF and the USD? Now, if we check the CHF, we can see that currently we have 1.6 AK net position, so a decrease from the 8.9 that we had here. In fact, we have seen a lot of longs getting closed and a lot of shorts getting added. So CHF looks quite weak. And if we go and see what we have from a USD perspective, what we can see that on the USD, we have seen a lot of longs getting closed, thousands of longs getting closed. It's a very long time that such amount of longs get closed. So we can expect the USD definitely to get weak. The point is, will USD get weaker than the CHF in order for USD CHF to actually make the move to the downside? Well, obviously, guys, trading is reactive and not predictive. Now, at the moment, it seems like, yes, USD is definitely weaker than the CHF. We're currently sitting with minus 5K net positions. All this time, we always had more longs than shorts with a positive positioning. Now we have more shorts than longs. It's the first time we have 16K shorts and 10.7K longs. So we can expect the USD to continue to get weaker than the CHF and possibly the move to the downside to continue. But as usual, guys, trading is reactive, not predictive. At the moment, all structure is bullish, so we can't be looking for the short yet. And as usual, monthly, weekly, and daily are for direction. The 4 hours is for entry. So how we will be approaching USD CHF in the following days with students? We will be monitoring price action on the 4-hour time frame inside of this area, waiting for the market to provide to us one of our valid entries. And if the market will provide to us one of our valid entries, then we will be taking a nice short with a very good risk to reward and very good probabilities for the continuation to the downside. But if on the 4 hours everything will remain as it is like now, the market will just continue to the upside and we will not be looking for any shorts because at the moment the structure is absolutely bullish. So we have to wait for further confirmations to see if this move to the downside can possibly happen. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you, and I will see you in the next video.